This is second part of trading types and strategies video, and in this video we'll learn about what all different trading strategies are there. These are classified based on nature of trading. So let's start it without wasting any time. So the first strategy is trend trading strategy, or many times it is called trend momentum strategy. So what is trend trading? Let me take you directly to the chart. This is chart of Nifty, and if you are seeing it, you can see good uptrend from this point, around this point, till somewhere here, right? So this is a good uptrend, right? So when such trend starts, people take positions based on this trend. It can be uptrend or downtrend, and it is called trend trading or momentum trading. Now swing trading or pullback trading, all these are types of trend momentum trading. These are the most profitable strategies. When I say profitable, what I mean is their risk reward is very much on trader's side. It has very less risk and huge reward associated with it. So trend momentum strategies are very much popular among traders. Now on this chart you are seeing that Nifty was going up very fast, right? In this and how you define trend? When higher highs and higher lows are forming on the chart, then it is called uptrend, and lower lows and lower highs are forming on the chart, then it is called downtrend. I will create a separate video for objectively identifying the trend, but currently this is our rough definition. When higher highs and higher lows are forming on the chart, it is uptrend. What I mean by higher highs and higher lows, let's say this is a chart, this is a chart. Now this is high, right? And this next high is on upside, so this is higher high, right? This high again is on higher side than this previous high, so this is also higher high. This is low, right? And this is higher low, because this low is higher than the previous low. This is another higher low. So when higher highs and higher lows are forming on a chart, it is in uptrend. And vice versa, when lower highs and lower lows are created on the chart, it is downtrend. So in this chart, say this is a higher high, this is higher high, this is higher high, this is higher high, right? And this is higher low, because this is previous low. This is higher low, this is higher low, this is higher low, this is higher low, right? Why you say this higher low? Because in comparison to the previous low, which was this one, this is on higher side, so this is higher low. So when higher highs and higher lows are forming on the chart, this is uptrend. And in trend momentum strategies, you trade uptrends or downtrends. So either you take trade uh, based on your strategies, which are basically swing trading strategies or pullback trading strategies. Okay? Now, how you trade it generally? I will just try to give it just brief examples. If Nifty started making higher highs, this is higher high, and now Nifty, this pullback happens, and when it breaks this high, you enter the trade. So you wait for this high to be broken, and here you enter the trade. You put stop loss below previous swing low, right? And you have to create your exit strategies also. Like here, when this pullback happened, when this high is broken, here you enter the trade, and here you put the stop loss. This is entry, right? Like that, you can enter here. This is one system. You can trade pullbacks also. How you trade pullbacks? Say when when now Nifty is going up and here it comes down, right? So you can use some reference points like moving averages or trend lines. You can draw some trend line. Let me draw a trend line for you. So you can draw a trend line. When price come to trend line, you can enter the trade. So suppose this is a trend line I am drawing. So this is a trend line, right? And whenever now here price did not actually touch the trend line, but here when price touch the trend line, you enter the trade. So this is your entry, right? And you define your exit route. So that can be anything. Like you can even say that with like time based. So after 5 days, exit the trade, or you can say that next time when price breaks this trend line, then exit. So this is up to you that how you design the system. But basically what you are doing, you are trading the trend, you are trading the momentum of the trend, and this type of strategies have very good risk reward. When I say risk reward, I mean reward to risk ratio. Means they have if they are getting if they are risking say 1000 rupees, their reward will be 5000 rupees or more. So it is called 1 to 5 risk to reward. So these are trend momentum strategies. Second are mean reversion strategies. Okay, now what is mean reversion? So for that I will do one thing. I'll draw I'll add a moving average to this chart. Let me add say 20 moving average. See, all these strategies you can apply these on different charts. You don't need to apply this on Nifty only. I just stick to Nifty charts to explain few things. In spite of that, you should use different charts. Means don't just stick to Nifty charts. Try these on different charts and see how it works. Okay. So this is our 20 moving average, and see what is happening here. Okay, I'll just go little back here. Okay, what see what is happening here. Now if you consider this 20 moving average as mean, then price is going above and this coming back to mean, right? Price goes above, comes back to mean, comes back to mean, here comes back to mean. Price goes below, then also it comes back to mean. Price goes above, this comes back to mean, right? So basically, if this is your moving average, price is fluctuating around the mean. Okay, so price is going up, but again it's coming to its mean. These type of strategies work best in range bound market, or when the script is in range. This works very good. Like price goes up, let's say this is the mean, price goes up, comes down, price goes down, then comes back to mean, then goes up, then comes back to mean, goes down. This is all keeps happening in range bound market. So these strategies work best in range bound market. You can use any instrument to trade these strategies. Generally option selling works best with mean reversion. That is again my personal experience. What I do is, if it is range bound, I sell credit spreads. So price went up here and I know that now price will go down from here. So what I do is I sell credit spread here. So generally I will sell call credit spread. This is also called bear call credit spread. So I will sell a call option of near the money or at the money call option. I will sell this call and I will buy one call option outside. So this I actually sold or write, and this I buy. So this one works as protection. This works as a protection, and this is with these strategies we restrict our profit, but we restrict our loss also. These type of strategies work best with mean reversion. And see, most of the time market will be in a range. Any stock, take chart of any stock and see, most of the time, even for most trending stocks also, most of the time market will be range bound. For very few days or fewer times it will be in trend, either uptrend or downtrend, but most of the time it will be in range bound. So mean reversion strategies should be there in your arsenal, and this gives good profit when market is range bound. Again, you can use different instruments and to trade the mean reversion. For any strategies, I generally use options, because in options you have very good flexibility. Okay. Okay, the last strategy based on the nature of trading is statistical arbitrage. We saw trend following, we saw mean reversion. The last one is statistical arbitrage. Now, what is statistical arbitrage? Let me clear the screen. Now see, I'll give you a quick example. Suppose there are two markets. There is one market here and there is one market 5 kilometers distance from here, and here you get apples for say 100 rupees per kilogram. Here the rate of apples is 100 rupees per kg. So I'll just note down, it's 100 rupees, right? 100 rupees. And 5 kilometer from here, rate of apples is 80 rupees per kg. Okay. Now, and it's a nearby place. Suppose to go there and come there, you need 5 rupees. Let's not consider that now, but you will have doubts, so I just told you that it takes 5 rupees to go there and come back. So in these two nearby markets, at one place, and the quality of apples is same. So at one place, rate of apples is 100 rupees per kg, and at the other place rate of apples is 80 rupees per kg. Here what you will do? Here you have a opportunity to do business, right? What is that opportunity? You will go to this market and buy, and you will come to this market and sell. So you will go buy for 80 rupees, come here, sell for 100 rupees, and whatever you will earn, you earn 20 rupees. This is called arbitrage. When there is price difference in at different places, it is called arbitrage. So you can take advantage of this. Arbitrage opportunities generally don't last long, because these are the only strategies where there is no scope of loss. Where is scope of loss? No scope of loss here, right? You buy for 80 rupees, sell for 100 rupees. Now here let's I hope you understood this example. Now let's take example in stock market. We have many exchanges here, but basically we have two important exchanges. One is NSE and other one is BSE. Most of the shares which are listed on NSE are also listed on BSE. BSE is the old exchange, but now NSE is more popular. You might also be knowing that Sensex is index of top 30 shares in BSE, and Nifty, or it's called Nifty 50, is index of top 50 shares in listed on NSE by market cap. Sensex is top 30. Okay, is index of top 30 shares listed on BSE by market cap. So these are two exchanges, and many shares are listed on these two. So sometimes there can be some difference in price, and when there is difference in price, you can take advantage of this. That for one share on BSE, say price is 5,000 rupees, and the same share price on NSE is 4,950 rupees. So you can buy it on NSE and immediately sell it on BSE at the same time. So in this trade, what happens is you get that 50 rupees. This is called statistical arbitrage. But these opportunities don't last long, and these are not for retail traders, because arbitrage trading is mostly done by algos. These algos will keep running, and this will identify the price difference or arbitrage opportunity. As these algos find, oh, arbitrage opportunity exists here, they immediately take the trade, and then arbitrage will be gone, right? because this is risk-free money. That's why these returns are less in arbitrage trading. But it needs very sophisticated systems, sophisticated algorithmic systems to trade arbitrage. Okay, you can see in your broker's terminal for the same script in different exchanges how price differ. It should be significant so that you can benefit. If there is very small difference, you will earn 2 rupees there, and in brokerage you will lose 10 rupees. So that should not happen. So whenever you are finding the arbitrage opportunities, there should be considerable gain to compensate for your other expenses like brokerage and taxes and everything. Well, I'll quickly try to show you. Now, I don't know if I will find or not. Okay, see, this one is a chart of Maruti. This is chart of Maruti, and note here. Note, you have to observe two things here. So this is on NSE, and its price is oh, so now market is closed, so we don't have too much difference, but here price is 6994.25, right? And now this is chart of Maruti, but BSC. Here you are seeing BSC, and here price is 6993.25. It's 6993.25, and earlier what it was on NSE, this is NSE, it was 6994.25. so this is 1 rupee difference. This 1 rupees is too small. Okay, just I wanted to show you that there can be difference. If there is big considerable difference, then you can trade arbitrage. Okay, and generally it is not for retail, so don't trade it. So basically you stick to trend momentum and mean reversion strategies, and one by one create one system which is trend based system, then create a system which is mean reversion based system. That way your portfolio will be mature, means in any type of market it will keep earning money. Your systems will means your equity curve will be smooth. Okay, so you will keep earning in all environments if you have all types of trading strategies in your arsenal. So this was brief about the trading strategies classification based on nature of trading. In near future I will create in-depth videos about each of these strategies, how to objectively identify trend, how to properly trade the trend, what are different strategies you can use to trade the trend. The same for mean reversion, and those videos will be in detail so that you get in-depth knowledge about each of these. Okay, and yeah, so I'll just quickly summarize the things. In the time-based trading, we saw three types. One was first type was scalping, which is not for retail traders. Then intraday trading, So initially, in your initial period in stock market, or when you are new to stock market, you should not trade intraday. Avoid it. When you are expert, then you can come to intraday. And again, I explained what type of personality is fit for intraday trading, and then positional trading, and I explained about how you can trade positional, and what type of person can trade positional, and that person strategy fit. And then we moved to strategies based on nature of trading. So first one we saw is trend following, and I explained about why to trade trend following strategies. And then we saw mean reversion strategies, which are basically for range bound market, and I explained the advantages of mean reversion strategies. And finally we saw statistical arbitrage, which is again not for the retail traders. And in near future I will create in-depth videos about each of these. Okay. Thank you very much for watching this video, and do like this video, and subscribe to the Quest for Alpha. And if you have any questions, then comment your questions on this video. I will try to answer your all the questions. And if you have any suggestions to improve this channel, then also you are welcome to give your suggestions. We are open to any type of suggestions. And subscribe to our channel. It help us grow this community, and it help us spread this knowledge to broad audience. Thank you very much for now, and goodbye.